when you're going after something like cement, where it's high capex, low margin, that the industry itself has already figured out how to do this at volumes and at an economics that actually can work. And so you need to figure out how to leverage as much of that as you can. So for us, if you look at our process, it is about using the existing feedstocks that are already used in the cement space, leveraging the existing infrastructure that's already in place from quarry through to kiln, but also the back end logistics and sales. It's making a product that fits under the existing regulations. And yes, we have a vision to how we're going to go to even higher percent of our material and really get all the way to net zero cement. But that's a journey that we'll be on. But we can start with the existing regulations and then really having economics that fit under the existing, market conditions.
Welcome back to the CleanTechies podcast, where we interview the top climate founders and VCs to get their best advice for you. In this episode, Silas and I chat with Ryan Gilliam, CEO of Fortera, a company focused on paving the way to zero CO2 cement, backed by leading investors like Khosla Ventures and Temasek. What makes Fortera so exciting is that they successfully raised all the way to their Series B, making them one of the not many later stage companies in climate. We talked about his experience fundraising, the ins and outs of their tech, how to win over customers, his experience working with project developers, the current state of supply chain dynamics, the climate capital stack, and more. One last thing, we are super excited to announce that we have launched a Patreon. Please check it out in the description of our Substack. We're trying to do bigger and better things every day, and each bit of your support means the world to us. As always, thanks so much for listening, and enjoy the episode. All right, Ryan, welcome to the show. How are you?
Doing great. Thanks for having me.
We're super excited to have you on. Let's just introduce you to the audience. Who are you?
Yeah, so Ryan Gilliam, the way I would describe myself, I'm a techie. So founded 3 companies in the clean tech space, all with a view of really looking at older technologies, that were developed before. Things like CO2 and energy efficiency and wastewater were really a focus. And so it's been from that viewpoint of knowing what we know now, how would you design these technologies to fit and be give you the products you need, but fit within the environmental impact part of it.
Hey there. Are you building a climate tech business and looking for very specialized talent? Consider reaching out to our sponsors, NextWave Partners. NextWave are experts in talent acquisition, recruitment, and retention across the climate tech, renewables, and ESG spaces globally. So if your team is growing or you're looking to make a career change yourself, feel free to reach out to NextWave at next-wavepartners.com or reach out to one of their consultants directly via their LinkedIn page.
And what Ryan is very humbly not mentioning is that not only is he a climate tech founder, he's a multiple-time climate tech founder, 15 years of experience in the industry, and you're also at one of the later stage companies that exist in climate right now. I mean, the valley of death is real. So I want to ask you, what is it like being a later stage company in climate? And for so many people who didn't make it to the stage, how do you feel about being here?
It depends on the day you ask me. Look, getting through that first of a kind valley of death, I mean, it's a challenge, right? And we're deep into that right now. I believe we're in a spot where we're both executing on our first commercial plant and putting product to market in the near term. So we have that path. We have a relationship where we're doing our first full commercial plant, a 25 times scale up. We're in the engineering phase deep into that right now. And we have this vision of where we're going with it, that I see a clear path of how we're getting out of this valley. But I think it's a challenge. And after 15 years, what I've learned from it is you have to have a pretty clear thesis, pretty clear mission, pretty clear way that your technology actually fits within the environment or within the ecosystem to actually allow you to get through that. It's not just about tech. It's also about your business model, the finances, and how you're gonna get out there.
And you didn't come at it with 0 scars. I think you definitely have a lot of stories to share.
There's a lot of scars there, and there's so many founders, entrepreneurs that are much more successful, known out there, that have said it long before I will. But the reality of a startup, it is the startups that are successful are the ones that can persevere through those ups and downs. If there is a founder out there that tells you it was easy, they came up with the tech, they scaled it up, it all went to plan, I'd love to meet them, because I don't see that as a reality. Yeah. And so you have to go through those ups and downs, and it's getting a team rallied around the mission that allows you to get through those hard times.
So let's start big. The FOAK Valley of Death. You're here, you're past your Series B. You got to this stage and you were selling a mission. You were selling your experience, you're selling what you learned. What I want to ask you is, what do you think resonated to get you to this stage?
Yeah, and so maybe to help describe that, I should explain that the Fortera, while we're 3.5, 4 years in as a company, we actually are really a 15-year-old company. And the reason why I just say that is we didn't get through that valley of death, or that first of a kind valley of death, in the first go around. So 15 years ago, I joined a company called Khosla. It's one of the first CO2 to products companies, right? And super successful company technically. We were able to create a new cement product inspired by the way nature forms its building materials. That's actually 44% by weight captures CO2, in the cement. We piloted that technology for multiple years, 100,000+ hours of R&D that went into that technology, over 100 patents issued on the technology. We put our material into real world applications. We did a few office buildings, we did sidewalks and things like that. So very successful technically. But as we went through that valley of death to try and scale up that technology, as we went through trying to find the right partnerships to bring that forward, it ultimately failed. And I actually took over that company as CEO and repivoted it into a new space that's still going forward in the chemical space, but shut down that CO2 to cement business back in 2014, because ultimately we failed in getting through that first of a kind valley of death. Because of that, and because of the other experience I've had with some of the other companies I've been involved with, really it helped form a pretty hard thesis on what is needed to actually get through that valley. And we're obviously in it right now, and I hope that thesis proves out. But what I would say is that there's a general tendency, which is you develop a new technology, that the technology itself will help drive adoption. And where we've come at it with is that technology you need to have at a minimum, but figuring out how to make that technology fit within the existing ecosystem is important, because there's so much when you're going after something like cement, where it's high capex, low margin, that the industry itself has already figured out how to do this at volumes and at an economics that actually can work. And so you need to figure out how to leverage as much of that as you can. So for us, if you look at our process, it is about using the existing feedstocks that are already used in the cement space, leveraging the existing infrastructure that's already in place from quarry through to kiln, but also the back end logistics and sales. It's making a product that fits under the existing regulations. And yes, we have a vision to how we're going to go to even higher percent of our material and really get all the way to net zero cement. But that's a journey that we'll be on. But we can start with the existing regulations, and then really having economics that fit under the existing market conditions. And it's from all of that and making sure that we had a process, product, business model that fits with all of that. That really, I believe, is what's allowing us to get through this valley of death, of this first of a kind issue. Because the natural tendency, as you can imagine, is everyone wants to be first to be second. First plants always cost more, they're less efficient. And so it's in really everyone's best interest to sit back, let somebody else prove it out, and then get in line. And so figuring out how you make the tech, how you make the business model resonate, how you solve for specific pain points of your customer, it's really sorting all of that out that gets you to those first adopters to get to the first plants. And I think, again, leveraging feedstocks, infrastructure, regulations, meeting with economics, that's what's helped propel us in a way that we've gotten the interest from the cement and lime world to actually bring the product forward.
Mm-hmm. Yeah, so general alignment with the existing infrastructure, not telling people, hey, you guys have been doing this for decades. We're just gonna, come in here and solve it all for you, right? And have all the answers, right? You're kind of playing by the rules that they have, right? I like that. I think that's something we've seen with a lot of the companies who appear to be succeeding, right? I don't think we've had many companies on who are as advanced as Fortera. So, we can actually say you are succeeding. Yes, you still have, some valley to go through, but compared to a lot of the companies we have on our earlier stage, what it'd be good to go to is, I guess, the problem, right? What is the problem you're solving, and why do you care so much about it to be willing to kind of, smash your head against the wall for 15 years to try to make this work?
Yeah, I mean, so the crazy fact about cement and concrete is, concrete, so cement, first of all, is the glue in concrete. Concrete's the second most consumed thing on earth behind water, right? So it's a huge market. And it's, upwards of 8% of the world's CO2 emissions. I think where some people get it wrong, which is what really I'm fighting to solve is, or what we're fighting to solve is, there's always a viewpoint, well, if something's bad for the environment, maybe let's replace it with another material. And we hear that a lot kind of in the space. If you actually look at concrete is one of the lowest CO2 per ton building materials out there. And the reason why it's 8% of the world's problem is because there's just so much of it used. So it's not like there's other materials out there that can just come in as a building material and replace concrete and actually be better for the environment. So to me, what that says is you're stuck with concrete. Concrete really is the building block of our civilization. It's actually one of the best from a CO2 emissions per ton of product. So we're stuck with it. So then it's how do we actually then solve the CO2, associated with it, and do it in a way that's actually a ubiquitous solution that can be rolled out broadly. I think there's a lot of great ideas out there that are going to be applicable to specific sites where there's specific feedstocks or there's specific market conditions or economics that work. And those are great, and they should be successful companies in doing that. But inevitably, that's not going to solve the CO2 emission problem when you have that many plants globally. You need something that can work economically on a massive scale to get there. And I mean, you can't see it from the camera here, but across the whole of our wall out the windows of my office here, we have paving the way to zero CO2 cement across that wall. And it's just really, for me, it's every time I look up, it can be reminding myself of what it is we're trying to solve for every day.
Mm-hmm. Yeah, it is obviously a huge problem, and I think it's an interesting point you make about it being one of the lowest cost per ton products. I don't think that's talked about necessarily, so it's interesting that you bring it up.
Lowest CO2 per ton products.
Yeah,
and
yeah.
Cost as well, but also lowest CO2, which is crazy. Yeah.
Yeah. And so you kind of already alluded to it, but I guess the big question in my mind is always, why isn't this already solved? Why hasn't it been solved already?
The cement concrete space, I mean, the fact that they can put a product to market, and it's different, obviously, regions around the world, but effectively $100 to $150 a ton. The fact that they can quarry, a feedstock, they can process it, they can logistically put it to market and use it in a way like that. It's pretty incredible that they've been able to drive down costs that low. And then also, it's a product that, frankly, it's used in life-bearing applications. Putting a new product out there to build a bridge or to build a skyscraper, if it hasn't just shown that it can stand up over a long periods of time, is really difficult. So you have both the economic challenge of bringing something new to the market, and then you have the regulatory challenge of making sure people feel comfortable in using it. And when you look at things like buildings and that, the actual cost of the cement or concrete that goes into that construction project is pretty low. People quote 1-2%, but it's very low. So putting those type of buildings and structures at risk with a new material, it's difficult to do.
I think the cost barrier is interesting because when you look at new construction, materials happen to be the majority of the cost, but it's not as simple. I think the average consumer thinks that that's construction or cement and not really understanding the dynamics there. I was reading an interesting article about materials and materials opportunities, and it basically made the case that most materials that you could optimize, we have. And so now we're getting to the parts where we're getting into real risky and dangerous territory, which is exactly what I think you're describing. The thing that I want to follow up with, especially with your relevant experience, is the supply chain behind it. You're developing a turnkey solution. It's augmenting into this whole cement construction process in a very interesting way. How did you find this unique approach, and what is it?
Yeah, so I'd say, I mean, luckily, because I joined that company 15 years ago that was making this new cement, inspired by nature. Again, same way coral reefs form. The idea was there. What it took over time was figuring out how to actually do it in a way that, again, fit within the ecosystem, allowed us to drive down economics, figured out how to get to scale. And so I think some of the mindset changes that had to happen for us along the way is a lot of startups and new techs. I feel like the more challenging, the more interesting the tech, the sexier it is from an investment perspective. And what that leads to is, I think a lot of people have a comfort in complexity. The more complex the tech, the more differentiated it would be from an IP differentiation. That means the better the tech is. But that also means that's that much harder to actually figure out how you're going to scale it up and do it economically. And so if you look at our technology, I mean, it is ambient temperature, ambient pressures, all happening in plastic tanks, plastic piping. Aside from our reactor where we're making this reactive carbonate, that's our cement, effectively every other process unit is off-the-shelf process units that come from other industries. So from an overall tech perspective, it's not as cool because of that. But that we had to purposely drive to that and stop reinventing the wheel and try and take as much stuff that's known out there as we could to then give us the ability to actually scale, so that we weren't, again, reinventing the wheel and having to figure out how we're going to get to certain process units to scale up and everything else. And it's through that simplification that I think we actually got to a process that now has a way to actually be, again, ubiquitously used across the cement industry. But that is a mindset change from where you typically come at it when you're developing new tech.
And whose mindsets are stuck in this way?
um,
I'm putting you on the spot here.
Yeah, you are putting me on the spot. So I didn't give in my background was I also worked as a venture partner for a venture capital firm doing sustainability and other investments for about 5 years. And so looked at a lot of companies, reviewed a lot of techs over the years. And I just say, generally speaking, I think the tech industry, the venture capital industry as a whole, typically is pretty interested in the more complex technologies. I think there used to also be a trend of not wanting to partner with the big players or the incumbents because the view would that they're not creative or they're not progressive enough and they're going to squash out these technologies. I think a lot of that's changed over time. So it's not just our mindset that's changed here at Fortera. I think broadly across the industry, we're so far now into clean tech, 15 years in, that I think a lot of people are really realizing that these big industries, what they've gotten right is driving down capital costs, driving down operating costs, sorting out logistics, moving product to market. And so I think there's a general trend towards that direction, but not everyone's there yet.
And so what's the trade-off in that analysis? To complete that picture, you're driving down these costs. What are you trading off that might be unattractive to the VCs of 2010?
Oh, I think some people look at our technology and say, well, so what is actually protected here, or what's going to stop other people, from doing it? And I also think sometimes when we talk to partners, they look at it and say, well, we'll license the technology. Why are you going to get a lot of value for it? What they don't see is the significant amount of money that actually went into developing it and the hundreds of patents that got there. I mean, this was not a tech that, although it looked simple in the lab, it took us years to figure out how to actually make a reactive carbonate that was shelf stable, that you could put in a cement silo or a cement bag. And then it took us significantly more years to figure out how do you actually increase the strength with that and engineer that material in a way that actually can do what you want out in the space. And so I think sometimes when you make it look simple, people also think then it's a simple tech to actually do, which is not the case.
And I think what you're inherently saying is that getting to market is essentially your IP. That getting product out there is part of your competitive advantage. That there are so many other things that when you look at them, they look so complex. They are so complex that just simply getting them out there is not as given as you think.
Yeah, I mean, it's an interesting transition to go through. So one, I would say if you look at the original company from 15 years ago, there was a viewpoint that everyone would want to pay for CO2 and that would drive economics, that would drive adoption. So great tech, business model not there. I think then, so we had to be just as creative on the business model of how do we create a business model that resonates with the industry that would make them want to adopt our technology and also adopt our technology as a first of a kind, as opposed to sitting back watching and waiting. And so being creative on the business model and figuring out how to incentivize them in the right way. I think one of the core values of our company is customer. And the reason for that is we had to really start understanding what is it that the customer wants and make sure that we were developing a technology, a product, and a business model that resonated with them, as opposed to, again, just getting to the coolest technology we could get to. So all of that, it's just been a learning process along the way to figure out how do we get this to resonate in the right way.
Hey guys, we need your help with something. In order to better understand what you like most about the show, what you dislike, and how we can help you, please take 7 minutes to fill out our listener survey if you haven't already. It only takes about 7 minutes, but it will drastically improve our ability to give you the best content that you're looking for. Thanks for your help. Now back to the show.
Let's talk about the customers. This is something you have a unique vantage point on. You've been talking to some of the same, maybe some of the different. Maybe some customers got tired and just don't want to talk to you anymore, or maybe they're in love with what you do. You've now been talking to different customers for 15 years. How have these customers changed over time?
Significant change. 15 years ago, when we started into the CO2 space, I'd say that the whole entire ecosystem, that means from just society through to the players through to government legislation, it really wasn't there yet on what needs to happen or that changes need to happen. And so even when I shut down the CO2 to cement business back in 2014, traveled a lot of miles around the world, every corner of the globe, talking with cement players, end users, trying to find somebody that wanted to take that technology forward or partner with us. Wasn't successful in doing that. So we fast forward to when we started this company. One of the first things we said we were going to do is, because we already had the tech, we already had piloted it, we knew the technology worked. First thing we were going to do is going to go out to the cement world, explain what's different, why the business model now actually allows them to do this in an economic way, to see how well it would resonate. And I say that, one, because we had a better business model that actually was clear to them, it resonated better. But I also think just, society and industry and government legislation have moved a long way towards really looking how to solve sustainability. And you can see that within the last few years with things like the IRA bill and other things like that have come out. I mean, there's a good push towards really trying to solve this. And I would say that, again, back in the original company, it was hard getting cement companies interested in wanting to test the material. This time around, I will say that we have been lucky in that everyone that we talk to has been interested in testing the material or sending us their material for testing. We've worked with companies really now all over the globe again, testing their material. And if you went to our back room and went through the storage rooms, you'd see buckets of material from all corners of the globe, right? And so that's just a clear indication that the industry is moving in the direction of wanting to see this solved. Now, I still think at the end of the day, it's got to be economic for them to be able to compete. And so they're only going to adopt something if there's a clear path to why it's economic and fits in with what they do. And that's where, our thesis really comes in. But definitely the industry has moved in the right direction of wanting to be supportive and solve for this.
Well, I'm gonna ask you a follow up on that, because I'm curious. Do you really think it's the industry as much as also now you're been in the space, they maybe recognize your product? In reflection, what do you think was the balance of you being able to speak a more compelling pitch versus the shifting mindsets?
Yeah, I mean, there's a lot of factors that go into this, right? And so one is, like, actually, you can probably see it behind me here. So this concrete slab was 13 years ago. We poured that along the coast in California. So we went back and cut it up, cored it to send it off for third-party testing to show our material holds up over time. So one is, I think we have more credibility because we can now show that our material stands up over time. Two, I think, again, one of the challenges of this mindset change in the venture world is we've gone to really embracing that we want to work within the cement ecosystem. So if you look at our board and you look at a lot of our senior management team, these are people that come out of the cement world, right? The ex-CEO of Lafarge, the largest cement company, is on our board. We have multiple, leaders in the company that are 20 plus years from the cement industry. And so it's bringing people in that actually understand how the industry works, understand how the ready-mix concrete side piece of it works. It's really, it's again, us trying to understand where our customers are at, or that value around customer. And so for me, it's, I feel like all of those things kind of come together to give you the perfect storm to really show people that you understand the industry, you have a product that stands up over time, and you're trying to work with them to bring it forward. And that's what changes that script.
Mm-hmm. I like this a lot. I guess what I want to make sure for everybody listening, because we have an understanding, but can you kind of explain to us the technology itself? Just going to give us a high level view, like you're explaining it to a 5-year-old.
Yeah. So in traditional, so let me start with traditional cement making so I can explain what we do. So in traditional cement making, 80% of the feedstock to your kiln is limestone. Limestone's calcium carbonate, which is 44% by weight CO2. So when you quarry that and you crush it, grind it, put it into your kiln at high temperature, it evolves that CO2. And that's why cement's so CO2 intensive. You lose all that, what they call process emissions or chemical emissions of CO2. And you're using hydrocarbons like coal or natural gas to heat that kiln up, which also then is emitting CO2. If you look at how nature forms its building blocks, the exact opposite happens. So if you look at coral reefs in the ocean, you actually absorb CO2, make a reactive form of limestone. So that same starting material that goes into cement, but now you make a reactive form of it. And that's actually what creates those structures in coral reefs or a lot of shells in nature. And so what we figured out is how to take something that exists, that happens in nature on really short time scales, and do it in a way that we can industrially create those same reactive minerals, but let them be shelf stable enough that they can go into a cement bag or into a cement silo. And then when you add water, they're gonna react. So what that means then is we effectively take limestone, which is the same feedstock that goes into cement, and turn it back into limestone. But we go from an inert rock that has no cementing properties to a form of limestone that's actually reactive and has cementing properties. And by doing that, we avoid all those CO2 emissions that would have come from heating up that rock.
Mm-hmm. And then, so how does this work for the cement producers? Because you're selling to cement producers, right? This is something that goes kind of along with their production facility. Can you talk about that and like what it looks like kind of mechanically?
Yeah, and this is another one of the challenges of fitting within the ecosystem is these plants are already built, they're already operational, they have customers that need that material. So the way we've designed our technology is we are bolt on, where we're basically adjacent to their plant. We allow it to still then use that limestone and take it all the way through to our reactive limestone, and then they can blend it in and put it to market. And they can do all this without ever having to shut down their plant. So we give them an ability to bolt on and do this transition without being an impact on their current operations. And so initially what we're going to do is start with blends that fit under the existing regulations. So we can go to this kind of 15% our material with Portland cement. It helps reduce some of the CO2 per ton, fits under the existing regulations, can go to market now, and they'll put it out as a blended cement. We know that we're synergistic with a lot of the other trends that are happening in the space. So we can mix with some of the other supplementary cementitious materials, go to 50% blends, really reduce CO2, and get that out to market again under existing regulations. The long-term goal for us is then to get all the way to 100% our product. And when we do 100% our material, you end up getting this beautiful white cement concrete. This is a mortar, but beautiful white cement. And so in this case, this is really the long-term goal. Full admission, this doesn't fit under the existing regulations, right? It's a different product, so this is going to take time. But what I would say is the breakthroughs we've had on this as a product, I think we're 5 years ahead of where I was expecting to be. We now have 100% our product at room temperature, can get to strengths of Portland cement that's on the market, which means it's almost double the actual regulation requirements. And so we know that we have that ability to eventually get to 100% product. And so what resonates with the cement industry is it gives them the ability to start under the existing regulations, smaller blends, some CO2 reduction. And as they get more and more comfortable with the product over time, they can go to higher and higher percent replacements, get on a pathway to 100%. And that allows them then to get all the way to a net zero cement product.
And what will it take, I guess, for them to get there? Is it just a matter of testing the product over time and seeing how it holds up? Is that kind of like you mentioned before? There was examples where you dug up the slab and then showed did testing on it. Is that what happens?
Yeah, I mean, so this slab is 15% us. So that is that first product we're going to market with. But exactly that. What we'll have to do is over time do these test pours, get material out into the real world, see how it stands up over time, get third-party people to validate it, and go through the regulatory process to get regulations written on it. So that's a long endeavor.
Yeah.
But I think that's one of the benefits we have is our material can work as a partial replacement to start, which means that's why we can build plants now. We can put product to market now. We can get people feeling comfortable with the product. We can go through that learning curve of building plants and reducing capital costs and operating costs to be even more competitive, because your nth plant is going to be much more economic than your first plant. And so we can go through that learning curve as we're putting product to market. And as then the 100% product becomes more accepted as we get through the regulatory process, we're then set up to put that to market.
I think it's a quite unique circumstance where you can, actually make money doing, just like a small percentage replacement initially and then eventually scale up. I don't think a lot of companies, they come up with the idea that we're going to fully replace it and there's no kind of in between, or they wouldn't be able to do that. So it is interesting because in startup land, generally you do not, you're not sitting around for 20 years waiting for, testing to happen on your materials, right? You need to scale quickly. You need to do something. So it's pretty fascinating. I really do want to understand why you had built a couple other companies and you had shut down one, kind of pivoted. Then what was the reason why you then decided to go build Fortera? Like, what was the impetus behind that? And when you said, you know what, this is the right timing now, or whatever, what was the reason?
Yeah, so I've been part of developing quite a few different technologies over the years. Myself and the co-founder at Fortera, we're probably, I don't know, 100 plus patents in together globally, and quite a few different techs. And when we shut down the CO2 to cement business at Fortera, it's hard as a tech person because it was a great technology, right? Really cool, product that's 44% by weight captured CO2 that actually cements. I mean, it's such a cool idea. And so it was unfortunate when we had to shut that down. So when CO2 started getting a focus again, we took some time to say, and we got called by some notable investors wondering if that original company now worked, and when CO2 was getting a focus. And no, the value on CO2 didn't change the original company, but it did make us say, let's go back, look at all the tech we had developed, but look at it from that new thesis, that perspective of working within the ecosystem as opposed to competing with it. Can we leverage everything that the ecosystem does so well and actually drive down costs to be competitive? And I don't want to say it was a eureka moment, but there was definitely a moment of putting pencil to paper where we realized, we missed something pretty obvious, that if we, again, leverage the feedstocks, the infrastructure, the logistics at existing cement plants, we could actually produce our material and be cost competitive with the existing price point on the market. And so that's what really drove us to start the company. I do have to say, when we were looking to start the company, part of it is to you as an entrepreneur, you can get pretty excited by your own ideas. And so we wanted to make sure we stress tested. So did a few different things. One, there was some fairly big prominent naysayers, academics from the original company when it shut down, of why it wouldn't work. And so actually reached out to some of those and said, look, here's what's different. Here's why this works now. And got support from them that they actually saw why what we were doing was differentiated. So it was a kind of a checkbox of the people that were kind of opponents before saw what we were doing would be different. Also reached out to some of the cement companies to see how much has the industry changed and how receptive would they be to actually working with us. And when we started the company, it was very quick into it. We signed the deal to build our plant in Northern California. So we saw very different feedback from the industry. And the last piece of it, which is frankly one of the coolest parts of it for me, is when we started Fortera, I went back to a lot of the original thought leaders in the original company. These are people that were 5-10 years on into their careers into other companies, and said, look, I know we missed on the first go round. Here's what's different. Here's why it's interesting. Do you want to join? And so right now, I'd say 25% of the company, I believe, is from that original company. So it also gave us conviction that what we had was differentiated. We were onto something that could work here because we got people that understood the tech and understood the lows of developing the tech during that shutdown better than anybody, willing to come back and do this again. And so that to me, really all of those gave us enough conviction that what we had can have a meaningful impact, and it was worth going after it.
I mean, that's meaningful. If you can convince the people who were burned the first time around to come back and be by your side, probably the most valuable assets you can have. I mean, they'd be more familiar with the ups and downs than any talent you could bring in.
Yeah, and no company gets shut down without a lot of downs. And so the fact that, having that history, those emotions that are there, and startups are emotional roller coasters, but being willing to come back, I mean, it gave us a lot of conviction that we were onto something.
Yeah, I mean, they're essentially going back to getting punched in the face all over again, but you made them excited too, so that makes a big difference. Let's talk about some of your supporters. I mean, you talked about your naysayers. Some people support you. Let's go into the people who supported you enough to give you a lot of money, right? You raised from Khosla Ventures early on. We've gone to raise out some later stage capital as well. When you started this journey 15 years ago, the capital stack looked completely different than where you are now. I know your fundraising journey involves some private transportation, so I'm definitely going to ask you about that. But let's just start off with, how did you go about raising, early rounds, and how did you get such a big ticket name on your cap table?
So Khosla Ventures was one of the first investors, or the first investor into the original company, Calera, 15 years ago, right? So they knew the journey. They put a lot of money behind the journey, and they also weathered the unfortunate part of having to shut that down. So maybe that's a little bit of the conviction again as well, is when we had the idea of why it was differentiated and why we could do this, one of the first things we did was went back to Vinod and Samir, the two of the founding partners of Khosla Ventures, who were part of that original company 15 years ago, and said, here's what's different. Here's why we think this works this time. And so the fact that they were willing to jump right in and back it, again, tells us that what we had was differentiated, because they knew better than anybody what we went through. So Khosla Ventures has been involved in all three of the companies that I've been a part of, and so great long history there. I think they have to be one of the most patient capital in sustainability. When they understand the tech and they believe in the tech, they really back their founders and help move it forward. And so, frankly, just been lucky career-wise that for 15 years I've had this great partnership with really the leading firm in sustainability.
I'm curious to just jump in really quick there. I'm curious, what kind of questions have they been asking over the years? Or rather, how did their questions change over the 15 years of them supporting you as a founder? How did you feel that relationship evolve over time?
So one, they have more experience in companies, more experience in sustainability than I'm ever going to pretend to have. So I don't want to put onto them what I think they've learned, but I would like to believe that we've all gone through the same learning curve of having to change that thesis of how to be successful in clean tech. So a lot of the stuff I've talked about, of actually, instead of competing with incumbents, partnering with them, really figuring out how we fit in within the existing ecosystem, leveraging the things that are done well, and how do we get to scalability. All of those are things that have been ongoing conversations with Khosla Ventures over 15 years. And so in terms of what's pushed what, or we've all just learned together, I think that's, getting to the thesis we're at now has not been our own journey. It's been a journey that we work with Khosla Ventures and other investors to really formulate and get right.
And let's talk about now then translating off of those investors who had built rapport with you, now bringing new investors in on the cap table. You raised from some foreign investors and traditional VC as well, I think, in your Series B. So can you talk about going from the A to B and what you learned, and why do you think so many people fail at that particular stage?
So when we went from the A to the B, still wanted to find sustainability investors that really understood the long-term game. I think what a lot of people don't appreciate is if you want to bring a new tech to market, these are long-term endeavors, right? And so you'll hear a lot of startups saying they're going to get to commercial plants in the next year and things like that. The reality is if you want to go from even a lab to a pilot plant, that's a multi-year endeavor. You want to go from pilot to demo to actually get past scalability of process units, that's multiple years. And then if you want to scale and build out a commercial plant, that's really at least a 3-year endeavor by the time you decide you're actually going to move forward with it and have permits in place. Because the engineering phase, the procurement phase, long lead equipment phase, construction phase, these are just long things to do. So Temasek, who came in on the Series B and co-led alongside Khosla Ventures, they're another great sustainability fund that understands kind of the long-term game of what we were trying to do. So great partner to have. We, since the Series B, we haven't made any public announcements, but we've obviously have new other investors at the table as well. And that's been our general view, is finding either investors who understand the sustainability space, understand what's going to take to move this forward, understand the longer term that takes there. We've also brought in investors who are strategic to the space, that actually understand cement or cement admixtures and other things, that understand that ecosystem to be helped us in our strategic side direction of how we do this. And then where we're at now, which is I think this first of a kind getting through the valley of death, is once you go from a Series A, Series B company to you're going into a Series C and raising bigger capital to do commercial plants, it's typically different funds, right? So you're starting to get into these infrastructure growth funds. And that's a hard one because they typically want lower risk. They want to see that you're already revenue positive. And that's why I think a lot of companies fail in this first of a kind valley of death, is because that leap from a pilot demo company and venture backed to commercial and kind of infrastructure growth back, that's a big leap. And if you see the makeup of our company, a lot of the people we've hired have been strategic hires from people that our CFO, for example, that come from the sustainability space, but also the project finance space, and understand what it takes to bring in a lot of funding, whether it be debt or equity, to actually support these larger projects. And so that's been a mindset shift we've had to navigate, is how do we bring in the right people and how do we tailor the offering to these other types of investors to get them comfortable with the level of risk, comfortable with the level of upside that they want to come in for a first of a kind type funding.
So you're thinking so far ahead that you're even committing people on your team, right? Like within your leadership to bring in that kind of expertise.
Absolutely. I mean, I would say we've gone from being a tech company to now we are a project company, right? So, and when you get to projects, it's a whole new can of worms that you get into to figure out how exactly to take something forward. And this is the hard part with any startup journey is, I'd say early on in startups, you hire a lot of generalists, people that can wear a lot of hats, get a lot of stuff done. But then there hits this transition as you get bigger and bigger, people have less of ability to do individual contribution. And now it's team contributions because projects and things become so big, you need lots of people to do it. So you need different people that can do that. And then you get to a point where you really need specialists. You need people that understand how to do project finance or project development or whatever else it is, but in a level of detail that really can take you to that next level. And so all startups go through this journey of what that makeup of talent looks like, what the type of people look like, what the type of team structure looks like, again, go from generalist to specialist. But we know that our hard next step of the company is raising project finance and project execution. We've added a fifth core value to our company, which is around execution, and it's specifically from that viewpoint of now when you're talking multi-$100 million projects, timelines, budget, being able to drive that to a close matters more than anything. And so you got to get the right people to do that.
I think I want to understand you alluded to it, and I think I understand it, but I want to clarify. For building the plants and the projects, is the finance for that is equity, or is it SPVs that are done on each individual thing? Like what does that look like for something like this? Because I think it's very important for people to understand you have gotten to this point where you said it before, the big private equity want quality returns, so you're basically trying to emulate what solar did, right? Get to a very quality and kind of repeatable return. So can you just talk about that and how it actually looks for people who are unfamiliar?
Yeah, and so if you look at it, Scott Healy, our CFO, I mean, he was a leader in solar, wind, renewable natural gas from that space, doing project financing in that space. So part of the reason is a lot of what we're trying to do is almost similar to that. So in solar, you take these long-term power purchase agreements to justify the capital to go in. We're almost doing the same. We're doing a PPA, but it's for product. So offtake of our product over time to justify that capital expenditure. And so what we've done from a project finance perspective is looked at how do we get leveraged debt and bring equity into the project and provide enough returns to get all those people interested in moving a project forward. And that means doing these long-term offtakes, giving people, make people feel comfortable that there's a clear revenue stream to justify doing that equity or that debt type investment. And I will say that it still is it's a tough structure to figure out and navigate and get right. The first plants will likely always be from, I mean, not just us, but I would imagine across the board will be corporate plants, right? You're going to have to put corporate equity in to get everybody feel comfortable to do them. At some point, there's a transition. Our plants, we know, offer their own P&L or offer their own economics, can justify the capital investment. So at some point, those will become their own subsidiaries, their own entities. They'll fund the equity and debt at the project level. And so those won't necessarily then be off of the corporate balance sheet anymore. But that's all a transition that will happen with time as you get past the risk stage, as people get more comfortable with the projects. And so early on, we're looking at putting that equity and debt in ourselves and leveraging debt structures and other things that are available for first of a kind type projects. But there's going to be a point once we're past that and the risk is gone that we know these cement and lime partners are going to want to put money in themselves toward these projects to reduce that offtake costs and to make better economics for themselves.
And so why go to the project development route? Because most companies who develop new technology, they do a few pilots and they prove it, and then their goal is to sell licenses of the IP, right? And maybe advise. Why do this versus that?
I think everyone has a different journey, but what we found is I think it's very hard when you haven't got to a first of a kind plant to get somebody to want to take the leap to put that $200 million of capital in themselves to do it, right? So you need to figure out how to get that first adopter into a risk profile where they feel comfortable moving forward. And so what we found is getting them to sign up for a long-term offtake agreement that's tied to that product performing is easier for them to get past that risk hurdle, because they know they can then put that product to market, they can make money on it, than it is to say, we'll license the technology to you. You need to come up with $150, $200 million worth of capital to do it yourself. I think there's people that will get there and they can do it that route. We have, at least in my experience over the last 15 years, de-risking that capital expenditure on the front end, I think, is needed to get adoption of our first of a kind plant out there. Now, I completely believe that after we get to a few commercial plants, after we're past that risk stage, people would rather put the money in themselves, because it's going to be better economics for them than having to pay that out to somebody else. But it's going to take getting past that risk stage to get people feeling comfortable putting their own capital at work.
Yeah, I like that. I mean, I think in the long run too, if you can become a project developer, I mean, there's also a lot of money to be made as a project developer, right?
Yeah, I mean, for sure, if you have these commercial plants as corporate commercial plants, there's a lot of cash flow, and I think that helps on valuation of the company. Frankly, with what we're trying to do, the end goal is really to have a meaningful impact on CO2 in the cement space, which means we want to go out as broadly as possible. So for sure, we'll do some corporate plants, and we'll want to keep doing corporate plants. But there hits a point where, with the number of plants in the world trying to touch on all these regions, you're going to need other people to put their capital at work and want to just license that technology to get out there broadly.
So having a flexible model. Okay. And I think we have to ask, it would be really irresponsible not to, we have to ask, can you give any kind of key pieces of advice on actually going to the point of getting a commercial project delivered, right? From the delivery perspective, the EPC, managing all that. And you could talk a little bit about where you are with your plant today.
Yeah. It's hard to make comments on it when you're right in the middle of it, right? Because with anybody that's doing a project, there's a lot of things I wish we had done differently. There's so many learnings along the way. But what I would say is that the planning on the front end and making sure you understand the project and all of its details, that's the site characteristics, that's the utilities availability, that's the CapEx and OpEx specific to that site, that's the market and putting product out there, the partnership and who's going to be doing what. There's so much that you really need to put prep in on the front end before you kick something off. Otherwise, you're going to be putting a lot of money at risk or re-spending a lot of money as you rethink things. And we're definitely, we've definitely done that along the way. We've had a lot of ups and downs in getting through these projects, and even the project coming online in 2 months in Reading that we're putting product to market, that has had a lot of ups and downs getting there. Again, the perseverance and the resiliency of the team to get there is really what matters in startups. But there's a lot of learnings along the way that, if you could go back and do it all over again, I'm sure you'd save a lot of money and a lot of time getting there, but that's part of the reality. So I think just having people that have been through it, putting the planning in on the front end is really needed.
Mm-hmm. Yeah. Without going into it, I think that's a good plug to have the right talent in place, right? But the one thing you mentioned this in the beginning of before we started recording, which was about supply chain and managing that, and there was a lot of difficulties. So could you just talk about, for people, hopefully a number of people go through this process, maybe in different technologies, but what are the biggest things you would do differently when it comes to kind of lining up your supply chain for producing this stuff?
Yeah, so supply chain for actually getting the plants built out, Fortera is a little bit of a unique situation, right? So started the company, we finished building out our first lab a week before COVID hit, right? So kind of the perfect storm of creating challenges for a company. But when we started building out the first plant, we did a lot of work to plan in advance on permitting side, on long lead procurement side. But I'd say something we got wrong is during COVID, the world changed in terms of supply chain, and things that used to be where I built other plants that you could overnight ship in certain parts to keep things moving. Some of those things all of a sudden became 6-month or longer lead times, right? So we actually had to start going on eBay and buying some used things just to be able to keep stuff moving forward. And so again, I think it's this not taking for granted that world dynamics have changed, supplies, markets have changed. And so really thinking through all the stuff that you're going to need, understanding the timelines for delivery, and getting stuff ordered early into the process. And so typically, as you go through the design build of these plants, you get through your feed package, you get into detailed engineering, you identify the few long lead equipment, you get those on order. Some of the stuff we have in our plant, like these are year-long lead times to get these pieces of equipment in place. What we took for granted was some of the simple stuff, like some of the fittings and piping, or the control cards for your PLC for running the plant. Some of those things that used to be off the shelf, quick to get, are now much longer lead time, and so you have to really think through all of that in detail early on.
Yeah, that's quite interesting. I mean, the thing that stands out to me when you say this is that there's a lot of founders, especially if they're, I mean, a lot of founders in the clean tech 2.0 space, I like to call it, they are not familiar with building projects or doing these things, right? So they need to have the foresight to bring somebody in who can help them think ahead to what you need, because in many cases they have no idea. And when you're running in kind of startup world, you have a certain period of time to get to your next raise.
Yeah.
And you it takes time, right? If your lead time is 18 months and you have an 18-month burn, you have 18 months of burn, and you're kind of in a tough situation. But I really appreciate this. We've covered so much today. I mean, this is probably one of my favorite episodes. I mean, I say that about a lot, but they keep getting better, I think. Maybe we're getting better. I don't know. Maybe the guests are getting better. I don't know. But this has been awesome to have you on. Any final thoughts that you want to leave us with, and as we wrap?
Appreciate you guys taking the time. I've listened to some of the other podcasts. I listen. I mean, you've also brought other green cement companies or low CO2 cement companies onto here. So just love that you actually talk to people in this space. It's a journey that obviously we hope a lot of companies win out and are successful in, so we can have a meaningful impact. So it's just great that you do this.
Yeah, absolutely. So it's only possible because people like you come on and are willing to put in the work for many, many years and be persevering.
For sure.
All right. Thanks so much. Thanks so much. Cheers.
Awesome. Thanks.